Hello, good evening, everyone. Hello.
Yeah, hello, good evening.
Good evening. Can you hear me? Okay. I
My
think so.
brother.
Okay.
Yeah,
Okay.
I can hear you. Yes.
Yeah, we're going to be very,
Good
very.
evening.
We only have 30 minutes to just stay on the line and talk about the pairs I posted on Monday and the rationale behind me posting them. The idea generation of me. I mean, thinking they're going to do fine. How I got to the conclusion of the fact that they're going to do well. So I'm going to be sharing that with all of you, and it is going to be very, very brief. We won't go too technical, like maybe show some indicators and all that. We are going to just use only one indicator, and sincerely, that was the only indicator I based my premise on before I posted those pairs that they're going to do well. And how I use them, what I do with them, and how I generate the ideas, I'm going to share with all of you. And in 30 minutes, we are done with the whole video. I mean, with the webinar. So I'll be starting with BTC. Although I know BTC was not among the pairs I posted, but the indicator I'm using to generate this idea was actually tested on Bitcoin. And I noticed it did well on Bitcoin. So I assume it's going to do well on other cryptos. So if you look at my screen right now, if you can see my screen, let me know, please. Can you see my screen? Hello?
Yes, exactly. Yes, exactly.
Yeah. So I'm on
Yeah,
a weekly chart.
yeah, we can.
I'm on a weekly chart right now. And I actually use this indicator on a daily time frame. I'm going to backtest it, like show you previous data, considering the behavior of the market with this indicator. So you see why I choose to use it, the indicator. I'll tell you the name, so you can get it on your chart as well if you want to use it. It's very, very simple and straightforward. So unless you have some other indicators you are using, which I wouldn't want to disregard, if you don't, and maybe you are just new to the market and you are just wondering how would you know when to sell, when to buy, that will be the basis of this video. I mean, of this webinar. If you look at my chart, I think I can go as far back as September last year. Can you see? So now the name of this indicator is this is it. This is the name of the indicator, NNFX Baseline Tool. I hope you are seeing where my cursor is. So you can easily search for the name of the indicator on your TradingView profile. If I do this, like indicators, you go to indicators, how this thing will not be slow. So it's not even for popping up. If you can bring it out on your chart, so we will be on the same page. I think it's slowing down a little bit. I don't know. So this is the indicator. Like you can see a channel on my. Let me remove it so that you can see the price chart alone. This is the price chart, just as it is. Right now, see the indicator. Basically, what this indicator does is this. It tells you the average price movement, and it will now plot, let's say, 1.5 of the average price upward and another 1.5 of the average price downward. The upward prediction is telling you, like, if you are going long, your expected take profit target. If you are, can you see it now? I think it's coming up now. I'll type the name so that you can maybe pull it up on your chart as well. The name is NNFX. I'll tell you the origin of the indicator as we goes on, so you can, even though it's not really, it's not an indicator I invented myself, but I have a group of trader I joined some times ago. The owner of the channel is No Nonsense VP, and this is his trading style, which I adopted way back when I started trading. When I mean at the time in my in my forex trading career. So what this guy is talking about is having a baseline tool that draws the average price movement at a particular point in time. And the average price, the average price, you will have to add like 1.5 of the price. Okay, this is the indicator. This is it. If you can see my chart, this is the indicator. When you type NNFS, I think you can see no nonsense Forex. That person is actually the originator of this strategy. So someone now wrote a script that works with that strategy, and I've been testing it on crypto, and it's doing very fine. So if you don't really have a strategy right now on ground, you can start basically with this, and as time goes by, you can develop something more complex. I mean, more precise on your own. So if you type it on your chart, it will pop up like this. NNFX Baseline Tool by Sickojacko or something. It's 432 likes. So that's it. You close it. You have the indicator on your chart. So I will explain to you how this indicator works right now. This is what I'm saying. There is a particular line in the middle of the three lines. There are three lines that forms a channel. This is the upper channel I'm talking about. Like if you look at it this way, you see something. I mean, you see the upper part of the channel, then the lower part of the channel. As at the time price was touching the upper part of the channel, you should be anticipating price to do a correction and come back down. And if it's going to come back down, the range at which you'll be expecting it to come back, to drop down, will be a factor of the lower channel. If you can see, if you look at the behavior of the candles on this indicator, you will notice some, let me say, some degree of accuracy. It can't be 100% perfect, I know that. But anytime I want to buy, the idea is buying at the lower part of this channel. And anytime I want to sell, the idea is selling at the upper part of the channel. It is that simple. Now, to be sure, I want the price to break above the middle line, which is the real average price movement. Now, this middle line, the main premise of it is Ichimoku. There is this line in the Ichimoku indicator. If you know Ichimoku indicator, there is this Kijin Sun. This line, let me maybe if I should just blur the upper and the lower channel, so you'll be able to see the main indicator itself. The upper, this thing is really slow. Now it's now double. Okay. Now if you look at it, you will see green arrows, then red arrow on the top. What the green arrow is telling you is a buy signal. What the red arrow on the top, on the upper part of the channel is telling you is a sell signal. It is very simple. Using this indicator, all you only need to add to this indicator is your right frame of mind. You must be, let me say, you must be timely, and you must be ready to take action when need be. When there is no need for you to take action, you really don't need to take any action. You just watch. Now, there is a third signal on this indicator. It's always a yellow arrow. The yellow arrow will only pop up when price is crossing down or up above the channel, like the lower part of the channel. When the price is crossing, when it's crossing down the channel, like when it's going beyond the projection of this indicator, then you see this yellow arrow. Also, when it's crossing above, you see a yellow arrow as well, like showing you price is breaking above that yellow line. Now, if you look at the behavior of price since last year, in consideration to what this indicator is saying, you agree with me that truly it gauges the price to a degree of accuracy. So if you are using this indicator, it is very simple. What you want to do is, for the sake of the people that are buying to hold, like people who are on spot, you want to buy at the time the price is touching downward the channel, just like it did today on this candle, on this, this what do we call it, like the correction we had today was so massive, like immediately it touches the downward part of the channel, you will notice price started moving backward, back upward. Now, when you have situations like this, like when the market is already, is on the correction phase, now it breaks down the downward channel, like it is right now. I'm anticipating tomorrow to still be a red day. Before I can before I can assume a long position again in this market, I want to see price cross above this middle line. Let me change my distance so I can use arrows. Okay. Now look at this. Look at this middle, the average price movement, where you have this green line. If I want to assume any long position in BTC anytime soon, I will want to see price trades above this middle channel, the middle line in the channel, this very one. If I want to assume a short position, I want to make sure price has already touched the upper part of the channel, indicating for me that, let's say, and like a situation where it's already, like the trend is already ending, I'm thinking, okay, anytime it touches this upper part of the channel, it should just drop down. Exactly, that was what it did on this candle. Immediately it touches this place, it never touched back onto this place again. Like here, it will come like this very green candle like this. It is an indication for me that truly the price is going to descend, because if you look at this candle, the pressure in this is not equal to this. It's very, very low compared to the pressure of the last candle touching the upper part of the channel. So my assumption is going to be based on the fact that price won't trade back above this last candle that has touched the channel until it touches either the middle channel or the lower part of the channel. If you go on your own chart personally, take your time, study the behavior of this indicator, look at it very well, the way it behaves with price. I think at times you might have a fake out, no doubt. It can't be 100% accurate, like I said. But imagine you buying here. Imagine you buying here, like here. It touches this lower part of the channel, and ever since it never touched the lower part of the channel until it trades above, well above the channel. Here, I'll be assuming it will trade back, but I will not enter a short position because I want it to cross the average price. Immediately it goes below the average price, I want to sell. Now, assuming I'm trading, I pull a long position from here. Where will I put my stop loss? Definitely somewhere below this place. Ordinarily, if I'm buying to hold and I bought here on the close of this candle, my stop is going to be, let's say, somewhere below this place, somewhere around here. Somewhere around here. Open, price won't break down further. Now, for futures trading, I won't assume a long position in this very place, on this red candle. On spot, I might buy here, thinking this is the cheapest I could get at the time. But on futures, I will not buy here. I will wait for price to cross this middle, this average line. Immediately it crosses it, then the downward, the what's it called? The lower part of the channel will serve as my stop loss, while my first take profit will be at the upper part of the channel. So again, the only thing this indicator does for you is just it gauges the average price movement. And why I like it is there's no film trick about it. There is no magic in it. No. I mean, it only works on principle of probability. Probability in the sense that if you look at it, it is more probable to say immediately price crosses above this middle line, we are above the average price for the time being. It will not trade back downward, but just go upward. Immediately it touches this upper part of the channel, probability of it coming downward a little bit is very, very high. So I want to take some profit here. I want to close my position if price trades back below the middle line. I won't wait here to close position if I'm on long position. This will be my stop loss, but I will not allow price to touch this place before I liquidate myself. Not waiting for buyers to liquidate me, because I notice price is already below the average price movement. That means it's trading back downward. At that time, I'll be considering taking a short position because price is already lower than the average price movement. I don't know if anyone is following me at all. Hello? Hello?
Hello, we are following.
Hello?
We are with you.
Okay.
Yeah, we are following.
I think with this little that I've said, if you take this indicator on your own chart, you can go and study it. Look at the way it behaves with other pairs. If you look at it, these are the pairs I posted on Monday. Let's just try and see what they did all through the week. Because this
I want to ask though. Hello, Fola.
Hello, my brother. Can you hear me?
Yes.
Can go ahead with your
Yes,
question because we will soon end the. Hello?
Okay, I just want to ask because
Okay.
I've seen Bollinger Band too. I want to ask, is there
This is
any
not
difference
Bollinger Band,
between
though.
that and the? I know it is not. I'm
Okay.
asking because the structure is the same.
Yeah,
And
the structure is the same, kind of. Yeah.
I think the logic between them is similar. Is there any difference?
You said the logic behind them is similar.
Yes.
Yeah, kind of. I used Bollinger
Is it
Band as
not?
well at the time. Have you asked your question? Should I go ahead? Hello?
Yes, I have. That's my question.
Now, yeah, it looks like Bollinger Band, but it's not Bollinger Band. And the structure of this indicator is not really like Bollinger Band. If you look at it, the middle line here, this is Kijin-sun, the one inside Ichimoku. This is Kijin-sun. Kijin-sun seems to be very accurate when it comes to calculating average price movement. Now, why I said this indicator works on probability is this. It will plot a position, a line above the average price and another line below the average price. What those lines are telling you is that is either price goes downward or it goes upward. If it's going upward, expect it to touch this place. If it's coming downward, expect it to touch this place. Like before you expect a reversal. And if you will agree with me, no indicator is 100% perfect. That's why I actually believe more in probability when it comes to trading in any asset class whatsoever, both forex, crypto, anything, even stock. I believe more in probability because I find out that you can't really trust all indicators at all time. They will always bring false signals. So if you are working with indicators, you want to work with an indicator that is giving you a probability of price movement. What is the probability of price having a correction after such a massive breakout? It is in fact, it is way beyond half. That's why you see price trades back down to this place. When you see price trending, and you are tempted to buy, always consider it. Am I really buying at the right time? Anytime I want to buy, I prefer buying at the downward part of the channel, or at most at the exact average price. With that in mind, I will have it. I would believe at least I'm not buying I'm not buying when it's too expensive, and I'm not buying too cheap. I think you understand the logic now. I don't know if you do. Hello.
Yes, I do.
So it's just based on probability. Like they often say in the market, nothing is guaranteed, nothing is sure. I want you to look at the behavior of price to this channel on this day's candle, like today's candle. Look at what it did. It touches the downward part of the channel and immediately is coming back upward. Now, if you look at the channel is no longer facing up again. It's already facing downward. Like there is already a descent, telling you we are already in a bearish condition of the market. Now, tomorrow's candle too, it will be so odd to see a candle that will just pop up tomorrow and go so massive and touch this upper part of the channel, considering the pressure, the sell pressure of today. Just look at it from this place. From this place, from what's that, from 61,000, yeah, I think 61,000 or 60,000 thereabout, to exactly 50,000. Now let's assume price close. We are already close to the close of the day. Let's assume the market is closing in the next how many hours? Let's say in the next 3 hours. Let's change it. Let's change the time frame to 4 hours. And look at the behavior of the price in this channel. Look at it. Can you see? This is giving me an indication that there is already a badass displacement in the market. Look at the way they are. The market is trying to balance itself back, like it's trying to readjust after this massive correction. So you should be able to guess that the probability of us having a large candle that will break above this upper channel, it is very, very low. So there is no reason for you to go long. Like maybe you are on futures, you are now thinking, okay, you want to go long at this point. No, it seems somehow. In fact, it is more probable that price will keep dropping than it will increase. Looking at this structure, this is a displacement. From the way you look at this, candle alone justifies a bearish condition of the market. You have no reason to buy at this time, unless you are on spot, or like someone who wants to buy and hold. Immediately I saw this like breaking downward to this extent. I knew that, okay, for someone who is buying to hold, this is one of the cheapest price you can have in the short time frame. For now, sure, we must still be in the bull run. Price will still, might still trade upward, but for now, we expect an accumulation phase that will readjust the situation of the market to a balance that will catalyze another uptrend. We can't have one massive candle now that will now erase all of the correction we already have today. Now look at the way it's behaving before we saw this gigantic candle that broke down the whole price range. Look at it. From here, it came down. Immediately it touches this average price line. I want to see it go back to this place before I can assume we have already resumed the bull run. I mean, a buy position again. Now, watching it on the 4-hour time frame, we didn't see it go back upward rather than trade back downward. From here alone, you should go. I mean, you should pull in a sell position. Can you see this candle? This very candle I'm on gives you a reason to do a sell trade and not go long again. Now it will fool you a little bit, trying to correct itself. I mean, trying to prove to you maybe it will resume an uptrend. I think we are up. Our time is up. Maybe we'll pull another like 15 minutes and we just round it up.
All right.
Unless it doesn't stop us out. I think it's not stopping us out. Let's just continue. If it stops us out, we might just pull another 15 minutes to just round it all up. So what I'm trying to say is this. Look at this price structure. Look at this structure. This is an uptrend. This is an uptrend. This is an accumulation phase. Then the uptrend, uptrend, uptrend. Then we see a drop, another drop. Now it touches the average price range. Another a little bit of uptrend. Now it touches this. I mean, touches it again here. A little bit of an uptrend. For the price not to touch this upper channel again, it is a clear indication that we are coming down. Now, if you are to sell on this candle, at the close of this candle, you enter a sell position. Your stop loss will be at the highest level we've ever had on price, because you want to assume it won't come back up. But if it should come back up, you don't want to stay too long in it. We all know it is very, very hard to short Bitcoin. Immediately you see price trades up to the highest level again, we all assume it is about to do another all-time high. So there is no reason for you to pull your stop loss above this place. It should be very reasonable to be at exactly the highest price ever. So what did we see here? A downward trend, a little bit of upward, and then the full downward trend just came up, and here we come, exactly on 50K. Exactly on 50K. Now this is on the 4-hour time frame. Let's go to the daily time frame. Let's see where that 50K ends on the daily time frame. Can you see? Like the way we see, from the way the price is behaving here, you will know this is exactly the lower part of the channel. By the time you saw this red candle, it's already a clear indication that it seems it doesn't want to keep going up. Then this small green candle confirms it all, because the pressure was low. Then the following this candle, as soon as it touches this, then I'm already planning a short position. And what did it do? Immediately it did this. Then we are down here. So what am I trying to say is this. No indicator will be perfect. You need not jam-pack your whole chart with 10, 15 indicators. You understand me now? The simpler it is, the easier it is for you to trade. That's what I have actually noticed over time. So you only work on what is probable. You only work on probability, because to me that's what really actually makes sense. The line here, I think I've had this line on this chart even right before the candle here drops down, because this point here was a previous low on the weekly. Let me bring it out so you see. I'm already anticipating price to retest that place without any help of any indicator. Look at it. This was the previous high we had before this very one that we are on. before this week's red candle. We are on weekly time frame now. If you look at it, I think the previous high we had before we broke through to this 65k level was this place, this very place. This green candle, I mean this green line, I had it here earlier on before the price broke through it, and I now raised it up to gauge the highest price ever. I mean that we presently have. Now, this was the lowest point before this price movement. My anticipation was the next correction we want to retest this place, just like we had a few weeks back when we had that big, I mean that massive correction that we were all assuming maybe the bull run is over. What did it do? It actually retested the previous low. In fact, it went below it to fool most of us that maybe the bull run was over, until now trade back up. Another thing I want to share with us all is this: every time we have an uptrend, a corresponding downward trend should be anticipated, and we should all gauge it to the fact that possibility of it testing the old low is very, very high. So you will be able to know what you are working with without even considering any indicator. Now, the reason why I love this indicator, again, I'll say it all again, it doesn't really prove itself like one super indicator like that. It is very simple. What does it do? Average price movement, which is the middle line, then it plots a channel upward, another channel downward, giving you an expected level which price might go to, either to the upside or to the downside. So it will only help you plan your trade very well. Like if you are going long, you have an expected take profit target. If you are going short, you have what you are expecting, like okay, so that by the time the price touches the downward channel, you already take some profit, so that you won't lose it all. And if you are going long, immediately you see price lift up above the average price range. By the time it touches the upper part of the channel, you should take some profit. Now imagine this place now. All this movement here, it's a proof that we are going bullish, because in as much the price did not trade back downward, did not come downward again to touch this lower part of the channel, I'm assuming a long position already. Now, in my own opinion, in my own personal opinion, this might not be 100% correct, but I'll share with you. Before I can tell you that this bull run might be over, I want to see price touches this place, 35k level. Because if you look at price, the last time we had a touch on this lower part of the channel was in March last year, when the virus started, when the lockdown started. Ever since then, we've not had a touch on this downward channel, if you look at this indicator very well. So any day I see price trades on the weekly basis, on the weekly time frame, anytime we see price trades back down to this place, then we can as well assume it's possible our bull run is over. So for me to make a conclusion, let's assume what is more probable is the fact that we are still on a bull run. We are still on a bull run. But if we should see like another 2 weeks candle and we cross below this green line, my brother, it's possible the party is over. It is very, very possible the party is over. But at this point, I'll still be hopeful. Because it's still the average price range. But at this point, in fact, I would just want to sit back and watch. Now, to me, this candle is still a form of correction, though it is very, very, it is massive kind of. We started the week with a bull run, in a bullish case, but now this candle is going to close bearish. How many hours do we have before the weekly candle closes? I think we have like 3 hours before the weekly candle closes. So next week too, I wouldn't be surprised if we see price ranging between the close of this candle and the low of this candle. They might not be as big as this, like as big as this giant. I mean, as this giant candle, but we must see something very low in pressure, trading between this lace and this lace, just between here, between this lace. If I see that kind of a thing, I want to believe we are still on the bull run. And by the time I want to assume a long position, I will go on the daily time frame. And on my daily time frame, I want to see price trades above the average price, right? I mean, the above the average price rate, which is at 60K level. So before I can resume any trade on futures on Bitcoin here, I mean, before I can pull any long trade, I want to see 61,000, 62, 61,500, 60,005. I want to see something above this candle. Then I will know, okay, I think the strength is back. The bull strength is back. Right now, it's bearish, and it is, in fact, the pressure is much. So don't be surprised the following week if we are trading between 60, 50, 55, 60, 50. You understand me now? We all know Bitcoin is very, very volatile. It can do one candle 10,000, because today now that's what it seems like. From 61K level, we drop down to 50, just one single candle, 10,000. So
11,000 actually.
Yeah, 11,000. Yeah. You see, in fact, that's much. It's really, really much. So we can see another candle like that, but the probability is low, because people are buying right now. Some people are buying. I'm sure some people are buying, because people assume we are seeing a very cheap price, so they want to take advantage of buying the dip. But if the buy pressure is not really that much, we will sustain this bearish move to the downside. Another thing for you to watch is anything below 50K. Be very, very mindful of it. Be very, very mindful of it. Most of the time when we have a correction like this, we often see a case where the lowest range we will ever get is always maybe half of it will have been done on the first candle, like it did in this place, like it did here. The lowest was here, but the first day the bearish move started, we saw price to as down as this spot. I don't know if you are following me with my hello.
I'm following you.
So what am I trying to say is this? Something like this. Let's expect something like, let me circle this place. Something like here, like this. Can you see what I'm doing? You understand me now? Hello?
I'm here. We are here.
This is what I assume we are experiencing right now. This place like this. Now, what I was saying earlier was that the way I use this indicator, I want to resume a buy trade here on this average price. And look at it. What did it do? Immediately price crosses above this range again. It has been giving you indications here that it's going to resume the bull run by touching this average price. Then it came down again. I will not do a buy here on a futures trade, because it's possible the bearish condition continues. But this candle is enough a proof that the bulls are back. Now I just want to wait for confirmation, and the confirmation came right on this candle by touching this average price. The following day too came bearish, giving me opportunity to buy lower. Now another candle, then the full confirmation came on this candle because price closed, opened downward here, then close upward above the average price. There is a reason for me to do a buy here. So if you watch from all of this place, you are just at the sideline watching the behavior of price. By the time this candle closes, if you resume a bull, if you take a buy entry here, from here to here, it's already, you've had some. You should just at least take some profit. That's what is reasonable. So that was what I meant when I was saying, if you are using this indicator, you need your psychology in check at the same time. You need your head, not just the indicator alone. So if you enter a long position here and you see price touching this place, you can close 10% of your trade. Here again, it drops down. You want to actually close all, but it is not advisable to close all because you have not seen price close down to this place. And if you are considering this candle, look at the candle that precedes it. It did not, the low of this candle did not even come close to this. So it is an indication for you that the price is still going bullish. By the time it breaks down here, the next day again, for it to have touched this place, I will close like half of my trade here at this spot. So these are the reasons why I said, apart from the indicator, you need your decision-making ability to be like top-notch. You need your head. You need your psyche in check. And here again, it did the same thing. We saw a downward price movement. Immediately it crossed the average price range, then it gave you reason to just go long again. By the time it's touching this place, I will have closed some of my trade. Mind you, I will have taken some profit here. Assuming I closed here, because it's about touching it. This day will be a day I will watch because I will not want to go back into the trade because I've already closed trade here. This candle alone is a reason for me to buy.